Good morning, everyone, and welcome to the European crossover webinar. And we're seeing quite activity across the board. I mean, here in the euro, another significant market that isn't moving much but had an opportunity to break out on Friday was the Kiwi yen, and we'll take a look at that. Bear with me. You can see here on Friday, we were challenging the bias chart resistance. And I said, it's going to be a big deal if we can get a close above that. Well, we didn't. And we've actually rolled back, although we closed a little bit better on Friday. We certainly didn't take out that bias chart. And now we've actually backslid here. So has a little bit of pressure here. Move back into the main screen. Actually, before we do that, we'll take a look here. We are seeing crude continue to weaken here. So it's coming in towards, I'm looking at a daily chart here, towards this key level 55.59, as well as this lower trend line, which is coming across the bodies or the wicks. Well, not the wicks, but I mean the bodies themselves. And gold here on daily still continues to be a bit on the weak side. S&Ps have moved back up a little bit higher after under some pretty good pressure on Friday. Let's go and move back into the main screen. Dollar CAD is working a little bit lower. We've been trapped in that very tight range. On here. And we spent the bulk of the weekend here. We're kind of pairing towards the lower side. We've been, that bias chart support has been 32.24. But if we get it to close below 32, it really opens the door for us to make a quick move to 31. So we shall see. Cable still a bit on the weak side, just above the 50% here, but relatively quiet trading. And dollar yen still keeping a bit undertone bid here. And the peso, after finally securing a close above 1960, trying to push it a little bit higher. What we'll do is we'll move into the news. Bear with me. I'm running a tad bit slow today. I'm caught a cold on Saturday and really a bit under the weather, to say the least. So bear with me one moment. Oh, okay, here we go. So it says the dollar stands tall as investors seek shelter. The dollar found broad support on Monday as global political uncertainty and fears over widening of the Sino-U.S. trade war kept investors in safe harbors ahead of a slew of global economic indicators this week. The green whack was steady against most major currencies. It's held firm on the Japanese yen at 108.93 and starting at 22.87. And while easing very slightly to the euro at 9.32. It gained against riskier trade exposed currencies such as the Aussie, Chinese yuan, and the biggest loser was actually the New Zealand dollar, which fell half a percentage point as business confidence hit its weakest in more than 11 years. Risk-off sentiment is prevailing in the market, said Anthony Doyle, global cross-asset specialist at fund manager Fidelity in Sydney. There's a lot of uncertainty out here. In Asian trading hours, traders mostly shrugged off news that the Trump administration was considering delisting Chinese companies from the U.S. stock markets after the report was hosed down by the Treasury officials. Elsewhere, factory activity surveys in China suggested there were some signs of improvement this month, though analysts believe the gains cannot be sustained and forecast further economic weakness. In Australia, forecast for a rate cut on Tuesday. Firm with gathering economic gloom, markets are pricing a better than 75% chance and the RBA will reduce its cash rate for a third time this year. German inflation, British economic growth, and U.S. manufacturing indicators are due later. With the markets largely banking in another rate cut, further moves in Asia, further moves in the Aussie will likely be driven by the RBA's tone and outlook. Hang on a moment. Bear with me. Someone's responding here. Hang on. Bear with me. Bear with me real quick. Sorry about that. Trying to help somebody out here. Okay, sorry about that. I was trying to help a member who didn't get the link. Sorry about that, folks. Trying to click it up, but too quick. So let me go and move on to this one. So the morning bid, and those are new. We covered just two new stories, one about the currency and then one about kind of like an overall. The morning bid kind of gives like a general tone of the market. And then from there, we go into and we look at the analysis. We do our bias chart. So just bear with me. The third quarter wasn't that bad. The final day of the third quarter is a moderately dour one for the world markets, although the fear was a wave of selling in Asia following Friday's reports that Washington may seek to delist Chinese companies from U.S. exchanges didn't materialize. Although Wall Street indices ended lower on the reports on Friday, Shanghai stocks only shed about 0.3 on Monday, and Hong Kong and Seoul rose more than 0.5%. Tokyo is underperformed, but U.S. stock futures were higher. Part of that resilience stems from the fact that many see the reports as just a tactic ahead of next week's resumption of formal trade talks between Washington and Beijing, and part to do with the fact that the Chinese markets effectively closed for the rest of the week for the National Day holidays that encompass the 70th anniversary celebrations for the Republic. So it kind of gives you like a tone of like I said, hey, we did see that sell-off, but with them China's markets being closed and afterwards, after today, and not that much of a reaction, we'll probably firm up a little bit potentially here in S&Ps, but we shall see. Or at least it won't be that big sell-off that potentially we could have seen today on the backdrop of this news. Moving on, the offshore won strong against a steady dollar. In Europe, eyes were on Financial Times interview with outgoing ECB President Mario Draghi. Draghi, who hands over the leadership to the ECB to the former Monetary Fund Chief Christine Lagarde next month, reiterated the need for the fiscal policy to support the government's failure to do so would see interest rates remain at extraordinary levels for longer. Other than that, that's about here. Let's go on and move into the main screen. And here's the news that we got out. And like I said, apologies, I'm a little bit, as I said, under the weather and basically running one step slow, if not two steps slow. So I'm kind of trying to stay on top of this. So sorry if I kind of lose a little bit of focus. Apologies there. So we did get German retail sales come out earlier. Of course, that was before the webinar. And then we got unemployment 5 minutes before the webinar. I did go ahead and post this in the room for the guys and gals to go and see. But you can see here that we're trading relatively quiet here with the euro. We do have British data at the bottom. Excuse me, at the bottom of the hour. Mortgage lending and approvals, and also GDP second quarter. Must be a final reading on that then. Business investment. And let's see, as we come into the States, Italian consumer prices is going to be at 5 a.m. Eastern. I'm in Texas, so these are listed under Central Standard Time. And then as we come into the States, we do have a German CPI at 8 a.m. Eastern with Canadian producer prices at 8:30 Eastern, and SHI PMI or Chicago PMI. Let me say, I'm trying to think of the right word, but as a nickname is referred to as SHI PMI. Short for Chicago. Dallas Fed Manufacturing Business Index. So that'll be a bit of a mover here. So we shall see where we move. So we do have some data coming in today. Let's move this out of the way, and we'll move into the analysis. So once again, we do have new listeners. So once we hit the, we look at, take a couple of news stories, one on FX and one on the morning bid. Sometimes it's not available at this time. Most of the time it is. We get kind of like a little bit of a tone of what the market is expecting overall, and then going forward, and then for the rest of the day. And we'll take a look at what economic reports were released and also what we're expecting, how that may impact certain pairs. And then, of course, like I said, we bring up the bias chart to do some analysis. Now, since it's Monday, actually going and have this analysis that I did, from over the weekend as we come into today. And I'm going and show you there. As I said, we have quite a few listeners. So you can see here, we do have different, disciplines. There's macro, candlestick, basic technical, harmonics, and Elliott wave. Well, where I go is I post my stuff here in basic technical, but Blake also does his there too. But some of the other guys, with their own disciplines, whether it's harmonics or Elliott waves, or Steve probably with the macro along with some technical. And you can see here that I post this here. Now, actually, I'm actually going to start that last week. We'll be actually updating throughout the day, throughout the week in the majors for the Asian update. So in case there's new data coming out or whatever, you're able to go and take a look at, get a little update in Asia for Asia trading. Sorry about that. So we're going to go and take a look at it with the euro. So let's blast over to that. And then I'll be looking at the analysis, which was done yesterday as we get into the Asian updates. So bear with us. So it says the euro continues its new day, new low. Friday's close was not above the prior day's open, as you can see right here. I mean, we moved higher, but look, we still couldn't even get above just the open. At least as it cut rallied a little bit higher, was not above the prior day's open. So the pressure remains. Henceforth, we're not seeing the euro rebound. We're kind of see it a little bit under pressure. Support levels are at 889 and 854. Bulls need a daily close above 1020 to jumpstart at least a short covering rally. So, okay. So I was asking about the same issue in the chat room. So one moment. So what we're seeing here is when we pull this further out, and I had that from last week also, it was at 889, but we're also looking at 854. Sorry, folks. So let me go on and pull this up. So if we get past that, we're looking at on the downside beyond 889, 854. And there's a good value at that 854. Hang on a moment. Right there, you see that? See right there, and that coincides right here with this. So looking at 854 doesn't mean they couldn't shoot a little bit past that, but at least it gives you an idea. If you were to see it come into 889 and dip further, and you say, "Wow, I think this is a good area to pick up the euro," or if you were to short and saying, "Look, I want to be covered," But more so, obviously, if you were picking it up, basically, where's the next level of support? Where's the next level of demand that we see? And that would come in right around that 854. On the upside, let's take a look at this. Well, this euro's in a whole heck of a lot of trouble. Let's take a look at it on the 2-hour chart. For right now, that's the immediate resistance, 976. So about 40 pips away, 42 pips away. So, obviously bearish. Let's go move into the cable. And it says cable is paired back to the 2271, which is a 50% of 1959 to 2583. So 50% back of this area here. After a 600 pip rally, immediate support comes in at 2248. You can see the 2248 for short covering with additional support at 2206. Resistance is 2354. You can see right here the pink line, the 2354. And for those that are new, like I said, I usually if it's my immediate resistance or support, I'll usually put in pink just so it'll stand out, because if I'm looking at multiple screens and markets, I can see just like good example was the New Zealand yen on Friday. I said, hey, look, wow, we're just above this key support, key resistance. If we can get a daily close above that, that will open the door. Well, we didn't get a daily close, and now we're seeing for the pressure this morning with the Kiwi yen. Obviously, Kiwi 11-year lows in consumer confidence. But anyway, that being said, let me take a look at something. Was it consumer confidence or business confidence? Yeah, business sentiment. A very close to a very 4-year low, on business sentiment survey. So, but anyway, so this is what we look now. There might be a little bit of resistance here, but the real resistance, because considering how oversold it is, we can end up sparking a little bit of short cover and get past that. So I really want to stick right there, and it's going to be 20. Well, right there. I think we mentioned 2354. We'll go right here on the intraday, 2346, and we've got 45 there, which move that up 110. Now, once again, some have quite a few newer people. As I always tell people, I always put my resistance or support levels through the bodies, because to me that's where you see the most volume. I always tell people how many people sold the top and how many people bought the bottom. Now, we have had several stabs up here, but if we come up here, what we're saying is you'll probably you can see here this low, and then these high here, close, and open here is, and he moves up in here, the market probably lighten up a little bit there. So henceforth, that's what we're at. Now, this morning we mentioned we did make a stab or reach to the 2271. We're going to allow for a little bit of room once again on a Monday. Things can happen. We mentioned 2248 in that, so that's going to be our bias chart support, 2248 on the cable. Let's move into the Aussie dollar. And like I said, apologies, folks. I'm running 1.5 steps slow this morning. So, Aussie is attempting to hold the 67.40 level ahead of the RBA rate decision. The key will be if this level holds on a daily close. Key resistance is 68.31, and support on the break will be 66.70. So that's going to be coming up quickly. I believe it's day after tomorrow. So, well, maybe, you know what? Actually, I think it is today. Bear with me one moment. Yeah, Rick says 20 hours. Yeah, I saw someone saying about 20 hours. And just want to make sure. Yeah, sure enough, it's tonight. So it depends on what neck of the woods you're in. So, you might be dependent. If you're in Asia, you're saying, oh, it's tomorrow. But if you're here in the States, you're saying, oh, it's later tonight, which would be, wow, holy smokes, 11:30 Eastern, 11:30 Central Standard Time. As I said, folks, I'm one step slow today. So we're going to go, as I mentioned, with the lower if we do take that dip, which is going to be, bear with me, 66.70. If we get that break, which we may get that break after all. But the key will be, can we close back above 67.40? So we'll see what happens. On the upside, we're going to go with the 68.31. Yeah, there's immediate resistance here at 68, but 68.31 is where the real, where the rubber meets the road. You know what I mean? So if we would get a rebound, you could get a rebound and turn it and even push beyond that. So it's 68.31 where you'd see some big movement there. Drink some water from my throat. Hang on a moment. And you can see here that the bias still remains, in this case, bearish. Okay. Cable, not really so much because we've had a phenomenal run. On a short-term case, which we generally look on a short-term basis, but if you look at cable overall, it's still bullish, but on a very short-term basis, it did turn a bit bearish. Let's go and move in now to the Kiwi. So it says Kiwi continues to hover above key weekly support level 62.55. A break lower sends a pair to 62.08 with the potential to 60.72 on the sustained break. No changes from last week's analysis. So we're going to go with 62.08 because we've just been hovering on the 62.55. And if you look at that, we'll pull this back. You can see the significance of the 62.55. We break past that. We'll make a quick dip to 62.08. And with the news that's been coming out, looks like that's certainly possible, and we don't want to be caught with our pants down, so go with 62.08. So if we do break lower, that may give you an area if you're short to look to go and cover. On the upside, let's take a look on the 2-hour. We'll call it right there. Immediate, which is 63.09. 63.09. There's some in here, but we'll go tighten it up with that. 63.09. Now let's move into the dollar CAD, which has been pretty much in a range almost for about the last 10 days. can see this has been treading water like nobody's business on this daily chart. The dollar CAD remains in a tight range from last week, but closed down for the week. A daily close below 32 even allows the pair to drive to 31. Upside resistance now is 32.88. Bulls need a daily close above 33.36 to extend a new leg. And you can see this 33.36. They need a daily close above that. Now, we're kind of hanging around here. You can see here, I think it's more evident at this point now when you see it on the daily, how we've been just in a very, very tight range, really for nearly 2 weeks. So on the upside, it's going to be right there, okay, 32.88 on the upside. You can almost tighten that a little bit lower, but we'll go with the 32.88 if things get a little bit jumping here. So it's going to be 32.88, although we know they need to get above 33.36 to open the door higher. Now, the reason that that's key is because you can see here, the market has made multiple stabs, but you can see right here, we rally, we sell off. We rally, we sell off and close lower. And so the market's trying to see what it can do. Now, if they get some kind of piece of news or Canadian, we do have Canadian data later today, you can see a jump. Once again, like I said, don't get too excited in the sense that we'd be looking at 32.88. But in order for this thing to get bullish, even if we closed up in here, we need a daily close above 33.36. If you get it that, you see, that'd be the highest close in a month. That would open the door for further short cover. Anybody that's short would need to cover. So once again, that's the significance of that. Support on the downside is going to be 32 even. Let's move into the peso. Ken, the peso says the dollar peso bulls have finally secured a daily close above 1960 to generate upside momentum. The pair needs to defend 1950 on a daily close to avoid a backslide. Resistance is 1982 with support at 1954. So we're actually doing pretty good so far. Hang on a moment. Let's see here. We finally got that daily close above that. And you can see the significance of this getting above that 1960. It's opened the door for us to push even higher. Now, as I mentioned, it's going to be 1954. If we were to start to backslide, it would be key that they close above 1954. I mean, that at this point, 1956, I mean, that's a resistance, a key level. But we want to just give it a little bit more room in case we were to backslide for a couple of days. So we're actually going to go with a little bit lower than probably would like to. 1954, keep that. And we've had this level in here, and it's been working pretty well, which is at 1972. You can see we took a stab and ran out of gas there and paired back, fell back to 1960, and then came back up in here. And we did mention up to 1982, and we'll go with that in the analysis. If they can get some further moves, it'll be key for them if they could push beyond 1982. And I think we've got some good resistance here. 1982. Oh, my God. Whew. This cold is killing me. Let me get on to the dollar yen. This says the dollar yen remains bid, partly due to dollar strength. Pullbacks have been well contained. Immediate resistance is 812. A daily close above 877 would force shorts to rethink. Support is 733. So at this point, we'll give it a little bit of room because we have been dancing around. So it's going to be 812 on the upside. And I think we have to give it a little bit of a bullish bent. Doesn't mean it's going to take off from here to the moon, but if you look at it on a short-term basis, you can see it continues to keep its bid. There we go. And on the lower side here, we're looking. If we do get a good slide back, it's going to be down here at 733. So we'll pull this down a bit. And let's go move into the cash dollar index. The dollar index moved higher out of a 75 tick range. At its best weekly close of this move, immediate resistance is 99.44, followed by 99.92. Support is 98.66, followed by 98.30. So the thing is that we've been kind of like this. We made this rally up in here that stopped out a lot of people, but then we had this basically a gravestone doji fell back, and a lot of people thinking this is it for the dollar, and then we kind of up and down, up and down, up and down. You can see, look at this, up one day, down the next day, further down, then up, then down, then up, then down, then up, then down. So it's been trapped, as I said, in the 75 tick range. I think people are still not sure if they can actually believe this move. So, well, it's not a matter of believing. To me, it's just a matter of where those resistance and support. So we're looking at 99.42 and then 99.44, I apologize. And then right here, we'll pull this back. You see these touches coming across here? Look at that. And then 99.92. So let's go mark that off. Sorry about that. Oh my God. Oh, man. If we were to see a lower move here, yeah, went as low as 98.66, but I think we'd see obviously a pause before that because. So let's take a look here on the 2-hour chart. Maybe closer to 98.74. Yeah, right here. If we do see a pair back, we'd be, and if we just dip that just a hair low right there, right there. See these touches come across? Let's go with 98.70. 98.70. Okay, and that covers the majors. Holy smokes. Okay, let's go to the cross rates. Oh, man. So the Kiwi yen is attempting to put in a bottom, but needs to secure a daily close above 68.10 for starters. Additional key resistance is 68.86. Bulls need to defend 67.44 on a daily close to avoid a slide back to 66.83. So, and they're actually below the 67.74. Bear with me. They need to defend that area there, and they're below it right now. Here's that last bastion of support, 67.47. We'll go with this. And they've already dipped below that, but we're going to indicate and there's a resistance, and it kept it in place on Friday. Look at that. So it's going to be 68.10. We actually had 68.11, so we'll stay with that. It continues to remain bearish. And let's go move into the euro yen. Trading in a fairly tight range here in the euro yen. Bear with me. It's running slow. Euro yen Friday, after moving to recent lows, closed above the two prior session closes. The pair has managed to defend the 1770 level, but bulls need to secure a daily close above 1869 to generate upside momentum. Immediate support is 1730. So okay, you can see the touches coming right here. That's like almost like a worst case scenario. We'll scoot it up just a bit higher. If we do backslide this morning, I'm not thinking we're going to do that much of a move in the euro. We'll go with 1729. And you can see resistance right here. 1872 is a long ways to go. Let's take a look at it on the 2-hour. Let's go right there. 1843. 1843 for resistance. And let's go move to the euro line. The euro has spent the prior week backpedaling. Support comes in at 67.15 with critical support at 60.95. Bulls need a daily close above 62.39 to relieve the downside pressure. We're still a little ways from that. A daily close above 63.02 allows a challenge of 65 units. So you can see we've spent, as I mentioned, this back week kind of just slide, this week, past week, backsliding here. We're trying to hold our own here. Yeah, that's going to be right there, 61.47. It really needs to hold that area. If not, it opens the door for a challenge lower. So we'll go with 61.47. And on the upside, well, we can see that right there, 62.39. So 61.47 and 62.39. And it still remains bearish. Right? We've moved a little bit higher, but as I said, we spent the past week backpedaling. It's going to move into the Euro Kiwi. Now, this is definitely bullish. The Euro Kiwi remains quite bullish despite the prior week's pullback. Initial support is 73.09. With 72.21 to be defended to keep the bulls in full control. Initial resistance is 74.54. Well, we've made actually a push here up to the 75.03, and that's when they ran out of gas. So we'll label that 75.03. You can see here they made it up to that level. May have taken it out by 1 pip, and we kind of pulled back a bit. So 75.03. And support on the backside, we'll just go with that right there where we opened and closed right there. 73.40. 73.40. Bit of a room here, but we've got some room on that there. This market's been pretty solid. Very, very solid. So dips you can see here were very well defended here. Let's move into the Aussie yen. Oh, sorry, my throat is just so dry. The Aussie yen, after a week of spinning its tires in a tight range, the pair managed to close a bit higher. You saw that bar, the previous bar. With the RBA rate decision upon us, support comes in at 72.28. You can see that'd be about 50 pips lower. Followed by 71.65. Upside resistance is 73.40, followed by 74.2. Now we have to allow, you have to allow a wide range because of the RBA rate decision. So we are going to go and mark this off at 72.28 and 71.65. And on the upside, 73.40, followed by 74.02. There we go. Kind of gives you a gauge or the parameters once we get that rate decision. So if we go past, and that's only 50 pips away, where do I find additional support? It's going to come in at 71.65. Okay. Right there. You see that? Coming in right there. Actually went off with the 2 hour, but you can see right there. You can see this cluster, that level of all that volume activity. That's what I'm coming on with the 71.65. Let's go move into the guppy. The guppy has eased back 300 pips from last week's high, just ahead of key support level 32.26. A break lower opens a challenge to 31.05. Resistance is 34.14. The pair remains in a bullish mode. So we did make a defense so far ahead of this one before we got there, 32.26. We'll probably just move this just a tad bit lower. We'll say it's there, right there. I'll show you. Pull this back. That's going to be our extra support. You see that? Those touches coming across here and here. The body close. Okay. So if we were to break a little bit lower, this is where you'd be looking for additional support. So really about 100 pips lower. If we were to break lower, you'd know where, hey, this is where we should see some buying come in. So it'd be right there. Called 3181. But that 3226 is held here for right now. This is only if we just make one more break. So, but you can see 3226 is a very key level here. Let's go and mark that off. We really need to mark that off. And on the upside, right there, 3367. You do get some volatility in that guppy. Let's go move into the sterling odd. Well, the sterling odd, after an upside break, spent the majority of last week backsliding. Initial support comes in at 81.41 with a key pivot level of 80.89. Just below. Resistance is 82.60. You can see that coming in right there. And on the 2 hour, it actually comes in there 82.80. Right there, 60. You see there? But we'll give it some room because it's starting to respond very nicely. And also with the Aussie, you'll have to allow for some room. So let's go with 82.78 and 83.24. Once again, because the RBA rate decision, you have to allow for that extra volatility. On the downside, let's go with 81.14. Oh, I had the 81.12, so we'll go with that. Yeah, we'll go with that, 81.14. So there's the bias chart for today. And taking a look, let's go move into another screen. You can see here gold continuing to pare back a bit on the spot, 1485. I think the D's futures are trading about a $7 premium, so you'd be looking at support around 1492 in the D's futures. You can see crude oil. Remember we mentioned here, it's just dripping a little bit lower, just below this 55.50. Now we've got a daily trend line from here. And you can see the S&P's kind of holding their own for right now. Bonds are a little bit lower, which would drive yields a little bit higher, but it's not giving that much support here for the euro. 10-year yields are also moving a little bit higher. So that's what we have for today. Thanks for joining us here on the European Crossover webinar. And I'll be here later today at 12:30 Eastern for the FX Daily Wrap-Up. Thanks.